You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky music means it's time for the funkiest show on our network. Yes, it's time for TWIFO, This Week in Futures Options, or the show where you never know what the heck we're going to talk about. Could be fluid milk, could be the old Bitcoin, could be crude, could be gold, could be lean hogs. You never know. That's why you got to tune in every week and find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you just tuned into this show, first off, welcome. We like all of you guys. Secondly, you're missing the whole rest of the network, pretty much a dozen other programs waiting for your listening pleasure. You like volatility? Yeah, we got that. You like your asset managers and how they should be utilizing and advising utilizing options? We got that. Maybe you're an active retail guy. You want to learn about how you should be using these things, how you should trade them, unusual activity? Guess what? We got that. Daily news, we got that. Tech, we got that. All that fun stuff. We got it all. Check it out at the old Options Insider Radio Network. So wherever you're getting this fine show, could be our site, could be iTunes, could be our app, wherever you go, make sure you hop on over and look at the full network feed. Subscribe if you're available on that platform. You'll get it all delivered to your device of choice pretty much as soon as it's available, which is pretty much almost every day. So we'll keep you busy. Don't worry, at the very least. And of course, wherever you listen, hit us up, questions, comments, insights. If you feel like you like what you hear, you want to leave a review, we won't stop you. that kind of stuff makes it easier for other people to find our shows after you guys. And of course, for you hardcores out there, make sure we give you a little gift, a little bonus every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern. We go live via the old Mixlr, so if you don't want to wait till the podcast comes out, I don't blame you. It's good stuff. Get in there, get at it, Mixlr.com, or check it out on our social media to learn more. And of course, while you're doing that, of course, these reports are all live, the ones that Nick and I and Matt are going to be talking about here today. You can do it all yourself while you're listening to the show, cmegroup.com/TWIFO, TWIFO. That's how you play along with the show while we're doing it. You can see exactly the same reports that Nick and I are going to be looking at throughout the show. And if you're listening after the fact on the podcast, make sure you go back and change those expiration settings to go to the last week so you can see exactly what we were talking about. All right. And I mentioned him. Let's get to him. Joining me on the old program today, starting off, my usual cohort, my partner in crime, Mr. Nick Howard, the man about town over there at Bantix Technologies and creator of a little platform we like to use, I don't know, once or twice around here, called Quick Strike. Mr. Nick, welcome back to the show, sir.
Hey, what's going on? I hope this is just TWIFO and not Twibo today. Let's make sure.
Twibo, Bitcoin?
Yeah.
All right, and also joining us, he's been on the show before, but it's been a while. Getting him back in to check in on all things crude. I'm not sure you've been paying attention, listeners. Crude's been doing a little bit lately, so to help us do just that, we've got Matt Bradbard over there. He is the director of alternative investments over there at RCM ALTS. So a lot to do over there because he's the alts guy at RCM ALTS. Mr. Matt, welcome back to the show, sir.
Thanks for having me, Mark. It's been, as you said, a minute since I've been on the show. It's good to always participate. Usually I have some takeaways and learn something from you and Nick every show.
All right, Mr. Matt, we're going to dive right in. Let's start right in because you're joining us to talk about all things crude. And it has been an interesting week. I think the last time you were on, which I believe was back in May or so. So it's been a while. You came on, you gave it what at the time was a pretty decent range for crude. I think you said the upside was going to be about 52 handle or so. And that pretty much held for many months afterwards. It wasn't until recently we saw crude kind of go on this extended upward trajectory into the northern range of the 50 handles. So we thought it was time now that we're past that range to bring you back. Of course, last time we did the show, we didn't do a show last week. It was a holiday, of course. We were talking about the big OPEC meeting, which came and went yesterday. On the 30th, so there was a lot of hope, a lot of interest that this may make some interesting developments out here in crude. I'm not sure if people got what they wanted out of this, but Matt, what's your takeaway from the recent run-up in crude and what we heard out of our friends over there at OPEC yesterday?
Yeah, I mean, OPEC, like governments around the globe, continue to kick the can down the field. Extended oil production through the end of next year doesn't look like really the market. We rallied up leading into OPEC, and it was a non-event. I mean, the volatility has picked up. The trading ranges the last couple of days seems to be a tug of war. Based on the timing, if I was on here in May, looks like crude bottomed shortly thereafter, and I'll take the other side. I think we're seeing topping patterns now. We're bumping up against that $58, $60 level, which we haven't seen trade through for quite some time, and though the trend's been up for the last 6 months, I think that $52, $53 level that I called a top and was wrong, I'd say we trade back down to that, and was resistance is now going to become support.
Yeah, it's funny you say it was wrong, but it held for a substantial amount of time. So I think it was a pretty. I mean, it makes forecasts forever. And, that seemed like it was a pretty good, because we got to that level a few times and then retreated off of it. So it seemed like there was, for quite some time, a lot of resistance at that 52, 53 level. And then finally, the market blew through it with a little help from, slowing U.S. production, a little bit of our friends overseas, and a bunch of some hurricanes and everything else kind of throwing all of that into the mix to get us north right now. So obviously you're handling a lot of the crude clients over there at RCM. What are they up to? What are they calling up? Are they looking for more rally? Are they concerned about retracement back to that level you were just talking about? What are the phones lighting up with these days?
I mean, I see a lot more action, especially when you get up around these levels. Bearish plays, just perusing through some of where the open interest and volume is just for the next couple months, January, February. It looks like there's more volume. on put side and call side. Clients that I'm dealing with, a lot of them are directionless, where they'll say where crude's not going to go. But the guys that are taking a stance and making a call on direction, they're starting to get bearish and have for the last week and a half.
Yeah, it's kind of interesting. Speaking of interesting, Nick, last time we did the show together before the holiday, we had Jeff on from CME, and he was talking about that weekly contract and how we were expecting big things from that contract come today. Because if you wanted to play the November 30th OPEC meeting, that weekly was pretty much the only game in town. The monthly wasn't going to do it. The other contracts weren't going to do it. So you kind of had to play on the weeklies. And I know we were watching it. You've been watching it, obviously, as well. In fact, I think you put out some interesting tweets on this just yesterday saying, I think we all kind of expected more from these weekly WTI options, and yet so far they weren't lighting up. Obviously, those numbers are from yesterday, but still, or actually this was maybe 2 days ago now, so maybe right before the meeting. Any thoughts on that? Are you surprised takeaways, perhaps? And did we see maybe any last-minute blips that might have changed your mind?
Well, I think first off, I want to give credit to the 52.5 level that was discussed months ago, because you and I brought that up in the show over and over and over again, how long it held.
Yeah, it held in for a long time. Yeah, for
a long time. So I think credit is due there, absolutely, for sure. As far as the weekly, yeah, I mean, I think from a numeric like from an absolute number standpoint, I think the volumes were pretty good in the contract, but just from a general weekly perspective, but from an event-based volatility perspective, it certainly didn't look like there was much going on. And maybe because a lot of the air got let out of the balloon throughout the course of the week about the extension and that kind of thing, and really no rhetoric that would force. I think people were looking more for something that would push it to the upside. It just feels like a lot of the event was already out of the bag before we even got to the announcement itself. And the announcement came, pretty early in the day. So that would have taken, we did see a little bit of a push, and I think people tried to, I saw some trading in that a little bit late in the day, but other than that, didn't seem like it performed as much as we were hoping it would. And as far as I pushed something out showing the open interest in the sort of across the whole 2018 spectrum, and we have a pretty tight band, 55 to 60, high open interest support and resistance there right now, and then around that the 50 level and the 65 level. So me not knowing much other than what I read and watch, I'm not talking to customers or anything like that, but I think that we're going to be just from looking at where it's been, a pretty tight range for at least the near term, and then not getting out much outside, like you guys are saying, maybe back down to the 52.3 level. But those 55 and 60, those are going to be defended, on the break and on the rally, and then after that, the 50 and the 65. So I think we're in a pretty tight range for the foreseeable future, especially what the open interest numbers look like in this whole calendar here.
Yeah, and of course the event we're talking about, if you weren't watching our friends at OPEC, of course we had to come in yesterday. They were going to discuss whether or not what they're going to do with these cuts, extend them. People were, I think, hoping for a little bit more extravagant, extraordinary measures to kind of get things back, perhaps in balance. Didn't really see a lot of that, where essentially they just agreed to extend the cuts until the end of next year, the end of 2018. Of course, at the same time, as we have that news, we have the EIA coming out saying U.S. production, which is always kind of the other shoe. You got OPEC on one hand, you got U.S. production on the other. The kind of the will they, won't they dance between the two of them. Who's going to win? EIA saying U.S. production up 3%, over 3% actually, to about 9.5 million barrels a day. So that seemed, after maybe extending the cuts, all right, maybe we'll get in rally home mode. Oh, wait a minute, U.S. production a little stronger than expected, right back down. So again, it's kind of that old song and dance. I don't know, Matt, do you have a lot of clients really coming in up into the meeting, really trying to play around the meeting, or was it more kind of just a wait and see for you and a lot of your clients?
I mean, a lot of the movement had already happened. I mean, you've seen the market in the last 5 months rally 30%, and there were guys trying to take advantage of that on the way up, but there wasn't a whole lot of action from my standpoint. Guys that I interact with, that they were placing bets ahead of the meeting. No, not really.
Not the big driver of paper for you guys that maybe you hoped it was going to be.
No, I mean, everybody's concentrating in the S&P, and we laugh, and I haven't really taken it seriously, but our phones are ringing off the hook, and people reaching out about Bitcoin. I mean, it's I know we'll touch on that a little later in the show, but it's unbelievable.
Yeah, you can't get enough of it. It's really, really kind of crazy. People who've, excuse me, I've been talking to people recently who had listed Bitcoin contracts a few years ago and then delisted them because there was no interest. All of a sudden, they're bringing those back. It's just in the last year, probably really in the last 6 months, that this fury, this frenzy has just exploded to just record levels. And now we're not seeing. Now, of course, we'll get to it a little bit later in the show. Some updates on all things Bitcoin. Of course, before we get that, Mr. Nick, what else you got cooking over there, sir?
Yeah, well, Matt had mentioned about the 60 level. I put out a chart a little bit before, and obviously anybody could go look at their long-term charts, but, we haven't seen anything. We traded up around 60. If I looking back at my charts, we kind of messed around with it in all the way back to the beginning of 2015. So we traded up in the middle of 2015. We got up a little bit over 60, but we're kind of in that pattern where we're almost, if you were looking at a stock, you'd be looking at a churn point, right? Where stuff's going to just trade around here sort of in a range, and then look for the breakout on the upside. Just from my old I think it's William O'Neill who was it? The Investors Business Daily guy used to teach about the cup and saucer pattern in the stocks. So yeah, we have a good almost 3 years since we've seen this level before from a price standpoint. So I think there's a lot of resistance there just from looking at the charts. The other thing too, and that I wanted to mention before we get into, Matt was saying how people are calling about the S&Ps and asking about the Bitcoin because they want to talk where the volatility is. But, Mark, one thing that you and I have talked about, and one thing I keep emphasizing, just, trying to draw on the experience I had from being in the pit and trading volatility, there are trades in this market, in these rangy markets that you can make. And, we've been talking about those. We're going to cover another one in gold and we talk about it later on. But even in this tight range, even if we stay in this $5 range with the crude oil, there are some sort of, as we've said before, a low volatility environment leads to a high gamma environment, which means if you find something that's pretty cheap from a volatility standpoint and you hedge it, you can trade that range and maybe not necessarily blow the doors off of the trade, but you can get your premium back and then be long for zero and just kind of trade that range at some very simple specified levels and really start to gain in the net return on that trade itself. So without a lot of risk, right? So you can kind of easily put some points in there where you can buy your deltas back or sell your deltas out and just keep doing that, adding on while you trade within that tight little range. So I don't think people should be discouraged with the fact that we're sort of going to noodle along here in this 55 to 60 range potentially for a while. There are opportunities there, and I think that if you pay attention, you can make some money.
Speaking of that range, you've been living in it for the last week. We're going to dive into the hot options action that was lighting it up out here in WTI right now. Like I mentioned, if you want to play along, cmegroup.com/TWIFO. If you are a TWIFO user, or I should say a Quick Strike user, then of course you can log into those tools anytime and check it out. Well, actually, before we get to that, I want to get Matt in really quickly here. If you got anything else to add before we do a deep dive into all the options, sir, have at it, Mr. Bradbard.
Well, I was just going to add to what Nick said. I mean, you just got to get a little bit more creative. If a market's sideways, energy traders that we have may even incorporate, products and getting in there trading RBOB and heating oil or a combination of WTI and crude. You just got to get more creative. There's always something to trade.
Yeah, we mentioned Nat Gas on the show before as well. Nat Gas getting pretty active. Maybe we'll get to that a little bit later today as well. So there are other areas, we say energy, that covers a wide swath. WTI gets a lion's share of the interest and the attention, but you can talk Nat Gas, you mentioned RBOB. You can go a lot of different ways with that and really find find the product that catches your eye. Let's see what was catching our eye out here in the WTI options, the big ones this week. We mentioned kind of range bound this week. Crude ending the week here pretty much down a handle. So pretty much right around where people were kind of expecting, maybe after kind of a meh coming out of OPEC. We saw, the continued story though, and I don't know, Nick, I don't know when we're going to see this story change, but people have been asking us for a long time, probably since the last time you were on, Matt, if not earlier. When the heck can I buy some vol and crude? When's it going to be a good time for premium buying? Well, the answer was not this week, and certainly not right before the events, because things got jacked up as they are wont to do. And guess what happened after the event was a bit of a resounding meh. That balloon got popped and popped pretty hard. So we've seen crude vols getting crushed. A couple of handles or more near the front portion of the curve, a little bit less, but still pushing 2 handles out farther off. So just another vol apocalypse. We got measures like OIV, which is the VIX of WTI, right around low 20s, 21, which is kind of just unheard of levels for recent. I mean, we saw back in the go-go days of crude a year and a half ago or so or more, we saw, that would only bottom out around 35, and now to get down to 21, it's just like just when it seems like they can't wring any more juice out of that sponge, they go ahead and do so. And they do so with some vigor and perhaps some violence. All you out there who've been buying premium out here in crude, hoping for that little bit of return of the vol, I'm sorry, you did not get it this week. What we did get this week was a decent amount of action. Overall OI up about over 7%, about 7.3%, which is a pretty strong week. Again, you got that OPEC number really driving a lot of interest out there. Unfortunately, as Nick said, still, for whatever reason, not a ton of action in the weeklies. I really thought this was going to be the time when the weeklies are going to shine, because it all lined up on the calendar pretty perfectly, but not so much. What we got instead was the Jan, the front month double puts, 55 puts. That's where the action was this week, a total of 54,000, just over 54,000 lighting it up this week, pretty evenly throughout the week, 9,000 most days and about 13,000 Tuesday and today. So again, pretty active out there, about 10,000 of that opening net on the week. So pretty active week on the double strike. People like playing those kind of even strikes out here in WTI. And lo and behold, the number 2 with the bullet was quite a substantially less, about 20,000 contracts less, were the 60 calls. So that double 60 risk reversal strangle, call it what you will, still active again this week. 35,000 of the 60 calls lighting it up, including 11,000 coming on Thursday, actually, excuse me. So that was the most active day. The rest kind of scattered throughout the week. Pretty much net only closing a couple thousand there. So a lot of back and forth. A lot of people probably playing the will they, won't they dance throughout the week. Will it break 60? Will it keep it? Oh no, get back out of it. So a lot of net churn and burn on the 60 strike out there. And then we drop off a little bit. 52 puts, actually, which is kind of interesting. That strike seemingly far in the rearview mirror these days, yet pretty active this week. 28,854 of those lighting it up. Almost half coming on Tuesday. 15,000 and change. So the lion's share coming then. Not coming again on the announcement day. So it kind of goes to say what to back up what Matt and Nick were saying before, that we saw a lion's share of the action and the move before the actual announcement itself. In fact, Thursday was one of the lighter days of the week for this contract. So go figure. About 4,000 of those contracts were net closing on the week. Then we filter out a little bit. We actually saw about half of the paper was in the front month, but there was some action a little bit farther out, including the double puts here in Feb. The Feb double puts actually lighting it up to the tune of about 23, almost 24,000. The lion's share coming on Wednesday, so those probably a little bit pre-event, the 29th, about 10,000 of those. About 7,000 total opening on the week on those double puts. Also worth noting, there was some action a little bit farther out, a little bit farther up as well. We saw the May 70 calls lighting it up to the tune of about 2,300 contracts this week. And a little bit, if you like, farther out and farther up the chain, then we got one for you here as well, going all the way out to June 2019. So June 2018, just not far enough for them. They got to go all the way out to June 2019. And we saw some interesting paper out here in terms of 10,000 of the 85 calls lighting it up on Tuesday of this week. Pretty much all that opening. And then 20,000 of the 95 calls lighting it up in June 2019. All of that opening. So I don't know, Mr. Nic, you got the block prints in front of you. 60 calls also doing about 1,250 there. So maybe it has all the same day. So it has the whiff of maybe a bit of a funky ratio out there. Maybe a ratio stupid would be even weirder, but that we've seen weird things out here before. So a little funky block paper up here way north. 85-95 strikes out here in June 2019. So maybe someone decided this is the beginning of a new bullish trend out here. A lot of funky paper here to be parsed. But maybe we'll start there, Mr. Nic, because that one kind of leaps off the page at me here. Any thoughts here on what was going up in that 10,000 by 20,000 blocks of the 85s and 95s in June of 2019, sir, as well as what else was catching your eye out there in crude this week?
Yeah, I'm looking at the blocks now, and I didn't see anything out there with those strikes. So actually, I'm wrong. Here we go. There we go. It looks like there was, yep. Sorry, it was all the way early in the morning on Tuesday. Looked like a 1x2 traded, basically. So, and it traded for even. So buying the 85s, selling the 95s for even. So I was going to say, that's probably, when you get way out there on the curve, you're talking some high premiums on some outrights. So somebody put on a play, didn't pay anything. The other side didn't do it. I mean, the buyer, seller, same, whatever, however you want to look at it, the buyer didn't pay anything. So it was 30s in the 85 calls and 15s in the 95 calls. So even way out there, that's not that expensive, but that is really far out on the delta curve. But that's what we're seeing was a 1x2. So one looked like it was broken into 1, 2, 3, 4, 5, 6 total pieces in the block. So, and for all the people listening, you can go on the CME Group website, cmegroup.com/quickstrike, and there is a new block trade browser that is available that was released last weekend, and it's available to the public where you can do the same thing I just did. Pick the energy tab, select the date of 11/28, and you could see those same trades as you scroll down. You can filter by a particular symbol or a group of symbols or whatever you want to do. So it's a useful tool, nice way to investigate what's going on in that sort of call around market.
Yeah, it had all the flavor, all the feel of a 1x2 out there. And I guess that guy figures he gets a little pop on that. If it gets moving enough where the 95s become an issue, I guess he figures he can cover probably before that time. Not too worried about being naked short units, I guess, above the 95 strike by June 2019. Maybe he figures he can get some futures on or something else to help offset that. Aside from that funky block, sir, what else caught your eye out here in WTI this week?
I was watching early, and in comparison to last week, as Matt said, we were up in vol for the week, and I was really sort of waiting, just because we were hovering around. I was waiting to see how bad the vol would come in once we sort of got through the number and digested it, and we got hit pretty good, considering that Jan was up for vol earlier in the week, and Feb was probably up like 2.5 or something like that. To be down 3 and to be down 2, it's a fairly significant little plop there. As far as I say we think we started at like 24 in Feb earlier in the week, and now we're down to 20. So, that's catching my eye for the most part. I think that we're going to see that front end. Well, we're going to see the whole. If you look at the term structure right now and it's plotted on a chart, it looks like there might be some dip to the front, and there is. It's one's 20.5, the other one's 22, but we have a pretty flat vol curve for the most part. So there's not a lot of expectation from a distance standpoint either, right? Everybody it's sort of around the 21 vol, which doesn't say much, which kind of plays into what we've been talking about, it just kind of moving sideways for a while. But the one thing, outside of the, waiting to see what the reaction was with the volatility and not seeing too much of a change with the quick skew, right? The quick skew is measuring the relative expense of the put and the call at the money. The big difference there is it just looks like the calls got a little bit cheaper and the puts stayed about where they were last week. So, we kind of, as Matt said, we moved up a little bit. We kind of caught that little bit of a rally, and we kind of sat there. And then, of course, that part where you're sitting is going to get hit. So that was some of the upside is going to get hit a little bit. Now, you guys can, and I'm curious to see what you guys think, because this is kind of how I think about these situations. you say, when is this vol going to pop for me, right? But you're buying options, you're buying volatility, but you're also buying gamma too, right? And a low volatility equates to higher gamma. So in a situation like this where we sort of run up to the top of a range or close to the top of a range, I always try to look and see what's a cheap strike that I can buy for a pretty, reasonable premium and hedge it with a pretty good sized delta. So if I do move back down towards the lower part of my range, I can get all or most of my money back just from my delta. So I could take those off and basically be in that option for nothing, and then kind of wait for that range to retrace itself. Or if it keeps going, then I don't really care, because maybe I might have lost some opportunity on my gamma, but I really already made my money back and I'm in it for zero. So it's kind of in my position, and it's we used to call it the offshore account, right? You keep it in there. It doesn't affect your deltas necessarily till it goes back up in the right direction. So I kind of like, and I've been saying it all the time, I said it in gold, and we can discuss something like that if we get a chance as well. But, what do you guys think of that cheap vol, just a couple strikes out of the money, buying, hedging, and waiting for a retracement back into the other part of the range?
I like that. I think that makes a lot of sense. And, Matt, I know you guys are kind of slinging a lot of things over there. and you mentioned it before over there at RCM in terms of products. But before we get into some other products really quickly, you got any last thoughts you want to leave our listeners with? I know WTI is a lot of your action over there. So what's catching your eye? Any ideas? Maybe you want to go out on a limb and do another one of your ranges, because the last one worked out pretty well until the last few months or so. So maybe you got another one of those up your sleeve for us.
I'll do one better. I'm probably not supposed to do this, but I'll pile on what Nick said and put something out there in terms of selling a February 60 call in WTI, buying a February 58 put. Costs $500 right now. Market makes a new high. Cut your losses on the call. I think the market's going south, and you can finance an at-the-money put with $1.50 out of the money call. And you got 2 months time, or we have 48 days till expiration.
There you go. Look at you, both of you, dueling options outlooks here. I like it, Mr. Nick. I don't know how's that one fit in your wheelhouse, in your outlook there, sir.
Yeah, I think it's a similar trade, right? In some respects, right? Because you're sort of limiting where you are, or you're taking a view on where the upside could potentially be. If you go out, if you go up, you can get out. But I was looking at buying the 60 call and hedging it with, I had a Feb 60 call, buying it at, $750 and hedging it with a 30 delta. So you had a break. Let me see if I can get my screen up here to get a little bit bigger here. Because I put it out there before. Did I put that out there before? Yeah, let me go to my home and look at my thing so I could read it, because I don't have my trade builder up. So I like that, because it's a low vol, and then if you have a break even on the upside where you start to make money, because if by some chance the futures keep going, your break even is at 62.10, and then you're making money if you're going further, because you're basically long a straddle at that point, and you have a break even on the downside from a delta standpoint at the 55 strike, which is the bottom of our range. So really you have a place to hedge from a gamma standpoint, because it's at the bottom of the range, which is going to be hard to get through, and then you get your premium back at that point. And then if we rally back up, you're long a call for nothing, and you can scalp your futures within there. So I like both of those trades. I tend to, it's funny, because I always tend to think like a vol trading delta neutral perspective. So for me to do outright naked collar is always sort of a bit uncomfortable, because I always feel like I'm exposed. But I guess that's the whole point.
That is the point of a collar. If you're not a little exposed, sir, if you're not a little naked, then what's the fun, right? There's no fun to be had there whatsoever. Before we get off energy really quickly, Matt, you mentioned RBOB. Any other products there that are lighting it up on your desk over there you want to hit really quickly before we dive on in? I know Nick's got an eye for gold today. Anything else in the energy space first before we move on?
I mean, you can just briefly, natural gas. It's funny where, when crude was bottoming around May or June, natural gas was topping. And, at the same time, crude's rallied 30%, natural gas has come off, nearly 20%. So it's interesting to see, I think that inverse relationship's going to continue. I don't really trade a whole lot of natural gas, nor do I have clients, but I'm thinking natural gas is finding a bottom at this $3 psychological level, and crude is finding a top at this $60 level. So it'll be interesting, how the next couple months plays out if one goes up, one goes down like they have in the last 3 months.
Yeah, speaking of one going up, one going down, so people like to play gold. They usually get that nice little inverse relationship. They bank on it. That's why they like playing out there, and we're seeing a little bit of funky action out here this week. Gold settling off the week, only off about 5 handles. It's been a turbulent week out here for the markets, and that usually translates into a little more interest for gold. Not so much here on the week, only off about 5 handles, though. So I guess it could have been a lot worse for the gold bugs out there, right around the 1285 level out there right now. Vol kind of a mixed bag out there as well, a little bit off in some terms, a little bit higher in others. So kind of depends where you're looking. Pick your poison out there. Pretty active week for gold, though. Open interest up about 9% on the week. So people were out there slinging some gold, and I'm guessing if you look into today's numbers, that probably helped contribute to that, obviously, with the big investigation results coming out and all the news coming there, driving a lot of volatility, a lot of action in the broad indices, and probably some commensurate action out here in the old shiny stuff. Again, cmegroup.com/TWIFO if you want to follow along yourselves, listeners. Look at all the charts out here. And what we got out here that was lighting it up for this week, number one with a bullet once again here, listeners. The front month here. Weekly is still kind of like crude a little bit. Weekly is still not where the action is in gold. It's in all the front month. This week actually is about nearly 56% of the action going up in that front month expiration cycle, with Jan again leading the way. The Jan 1300. So if you're wondering, are the crude bulls still out there? Are they still alive, still playing? Yeah, they are. They're playing on the 1300 strike. 7,600 of those going up this week. Actually, like I mentioned, the lion's share going up today, about 2,300 of those. Go figure. Getting a little crude call action on a day like today. Number two coming on Tuesday with about 2,000 or so going up there. The rest kind of scattered throughout the week. Pretty much actually unched from an OI perspective, so a lot of back and forth on this track. Kind of makes sense. People overwriting it, maybe people coming up to buy it in as well. So a little bit of both, people playing both sides. Then we got kind of a tie between the 1280 and the 1250 puts there, about 6,500 or close to it for each of those. The lion's share of the 1280 puts coming on Tuesday, about 2,500 of them there. Total on the week, about 2,600 opening. A different story for the 1250 puts, though. The lion's share actually coming today. About almost half of them going up today, and about 1,800 going up on Thursday. The rest kind of paltry, scattered throughout the rest of the week. And those kind of net unched from an OI perspective, slightly opening on the week here as well. So interesting different use cases, different time frames for those two put strikes. The 1280 is active earlier in the week. The 12 halves active, pretty active today. So interesting stuff there kind of across the board. We also saw the 12 half puts active out here in Feb as well. The Feb 12 half puts lighting it up to the tune of nearly 4,900 going up this week. The lion's share going up yesterday, actually. 2,500 there and about 1,700 today. So about 4,200 of that 4,900 going up in the last two sessions. The rest kind of paltry amounts throughout the week. And again, net slightly opening on the week. I guess in a lot of today's action may be opening. We'll see. But again, not surprising. We're seeing a lot of gold action just in this last session, as all this breaking news is really going to probably drive a little action out there. Let's go really quickly to see a little bit farther afield, Mr. Nic, as we are wont to do, to see. I know that last time we had that funky gold trade. I don't think we'll be able to eclipse that again anytime soon, but we keep looking wistfully out into the longer terms to see if we see anything funky, and not so much. I think the funkiest strike we got lighting it up this week, Mr. Nic, are the AUG. The AUG 2018 975 puts, a 300 lot going up this week, closing. Someone, I guess, giving up the ghost on their AUG 975 puts. They said, you know what, that strike may be a little bit too far, a little bit of a bridge too far here. We're going to close out that bad boy. But aside from that, not a lot of, actually a whole bunch of weird paper in AUG. 11 half puts trading, 10.75 puts, 12 quarter puts, not ton of size, 200 or less, but still a lot of funky strikes lighting it up in AUG this month. So Mr. Nic, interesting stuff. I know you had, actually I should mention 975 puts also active out here in June of 2019. So maybe that's the strike du jour out here, 975 in AUG and June, AUG 2018 and June 2019, lighting it up 500 this time in June of 2019 and all opening there. So perhaps maybe a bit of a roll. Maybe he decided August too soon. He decided he had to go out another year for some reason. We've seen weirder stuff. What was catching your eye out here in a weird week for gold, Mr. Nic?
Yeah, I think the part that I really wanted to talk about again was, today I saw a funny thing on Twitter where somebody had a T-shirt and it said, "I survived the 11 a.m. to 12 a.m. bear market of December 1st. It was pretty funny, And so we had a pretty good push down, but during that push down, we went from like a 1274 gold all the way up to like 1292. So we had an $18 range today in and of itself. And it goes back to what, again, it sounds like I'm self-promoting when I talk about these. Mark, how often do I talk about buying puts and buying futures and gold? I think
almost every week, I would think.
Every week. Right. And I don't. So everybody knows this disclaiming, I don't trade any, I don't trade any futures options. I trade equity stuff because I just can't handle the stress of doing it with what I'm doing for work and all that kind of stuff. So anyway, I'm disclaiming it from that standpoint, but I just watch it all the time. And today, and the trade we talked about back on November 10th, we did puts around the 1275 futures level. It was 1260 puts, and we hedged them. And in our new trade builder, which is going to be released very soon, it's out there this weekend, but you may not everybody might be able to get it. But what you're going to be able to do is build a trade and then watch as how that spread goes over. You'll be able to see it historically, but then you'll also be able to see the different points where it eclipses, where you can get out for your profit. But that trade alone from November 10th, the futures hit their break even point twice. So you could have hedged and let it break, and hedged and let it break, and basically got out of your money and then got your money back in spades. And then a third time it hit before it expired. So I just like these range bound trades, and I like them because again, and maybe I could throw this out to Matt from a margin standpoint. I don't know how that works, to be honest with you, but I like them because it feels like you're covered, right? You're buying a low volatility, so it's not like you're reaching for something, and you got your delta, so it's got to be good from a margin perspective. So the thing that catches my eye is we have a $20 to $30 range in the gold, and I started throwing a hashtag out there, low vol trades. I think there are lots of low vol high gamma, low vol, delta neutral trades out there where people can, they're not sexy, they're not super exposed. If the market kind of moves through those, moves too much, it's still good, because if it moves outside of that range, you're going to have a vol pop. So you're going to be long something that was cheap, and it moves through you in the direction that of the, like say the put that you own, it's going to be good for you, even though you might, you bought your deltas higher, you're going to get more deltas lower that you got to buy, and the ball's going to go up. So that's what's catching my eye, this continued range in these commodity products, or at least the ones that we're watching, And then as far as the regular stuff that we talk about, vol again pretty flat in the gold this week, just slightly off. When I say slightly off or slightly up, I generally look at it as being flat. The only noticeable thing is the calls got a little bit less expensive and the puts got a little bit less cheap. So we're starting to see a little bit of a rebalancing in the vol curves, at least for the first 6 or 8 months of this year. So that's what's catching my eyes. This range, trade the range. You could trade the range not only with futures, but you can trade. By doing a hedged option position, you're basically become a futures trader within a certain range. So, but your range is your position or your stops or your covers are determined by when your delta swing and how much of that premium you want to recover, and how much you think you're going to touch the spots where your break evens exist. So I'm going to keep beating that dead horse until something.
But it makes sense though.
Otherwise.
It makes sense. You're talking low gamma, low vol, high gamma trades. A week like this, where you're testing ranges, you're moving all over the place. You'd think, and what you just outlined, you're talking about getting a lot of gamma. This seems like the perfect recipe for slinging the weeklies, and yet we saw again this week. They're not. I don't know what it is. They're not lighting it up. It's on the crude and on these. The gold is nowhere near what we're seeing in the front month. I don't know. It's a bit of a mystery, Nick. I know we haven't really been able to solve it yet. Clearly, people like short duration stuff because they'll trade the front month with a few weeks to go and stuff, and they'll trade around events. So they'll trade short duration, and they'll trade short duration in other products. Just for whatever reason, it hasn't accreted here. I don't know. It's weird. We'll see it in some of the the metals ETFs. We'll see short duration paper. I don't know why that hasn't filtered through. Any thoughts on that, Mr. Nic?
No, I'm not sure. I'm really not sure. It's and even more so, right? If you talk about the shorter dated stuff, you're getting even more gamma, right? So you need even less of a swing to sort of go from having a delta to not having a delta. So you almost, and we talk about it all the time. It's like you're trading almost like a binary option, but you're not really responsible for the underlying from an outright standpoint because you're hedged. And I throw that question out to Matt. I go, if you do a 25 delta put and you're hedged, is your margin even that much lower because you're hedged? I don't know how that works.
Yeah, not the full amount, but usually it is reduced. I mean, it varies usually clearing firm to clearing firm. It's not set really by the exchange, though the margins are. But the span margin varies FCM to FCM, so whatever, depends on like the custodian that the underlying client's at. But yeah, it does lessen it a little.
And Matt, I know you're not a metals guy per se, but obviously metals was an interesting week to watch the shiny stuff. Any of your clients calling up about gold or maybe silver, some others, and anything catching your eye out there this week?
I mean, I like what Nick said, and I sometimes do stuff like that. I mean, what I found interesting in gold, obviously February's front month, so we rolled from December to January. Is if you look at, and I do when I identify, trends and trade ideas for clients, look at, some simple moving averages, whether it be the 50-day, the 100, the 200, and if you look at the 200-day moving average in gold futures, that's been the line in the sand for the last 3 months. We hit it in October, it held. Hit it a half a dozen times in November, December, and that's the recent low, the 200-day moving average. So, I think Nick is onto something in terms of those trading ranges. Silver and gold generally do the same thing. It's just silver is a lot bumpier ride. So you could do a similar strategy that Nick kind of outlined in gold, in silver as well. And I echo, what he said as well. I'm not sure why the weeklies haven't taken off. They certainly have in the financials, but they haven't in the metals and ags and some of these other markets, energies, that you alluded to. And I don't know that they will either.
Yeah, it's funny.
Immediate future, anyhow.
Yeah, it's funny you mentioned silver because one of your cohorts there at RCM, good old Mike Tusaw, was on a lot of my shows every week. He's been touting his long-term 2-year silver collar for the better part of a year now, or maybe not that long, but close to it, 6 months at least. And he was just lamenting on the show yesterday that it's kind of been much to do about nothing so far because it's kind of net unched from when he put it on. So it's been interesting to watch. You're right. Silver was kind of seemed like it was going to be a rocker and roller there for a while. Then it kind of gave up the ghost. Any last things on the metals, Mr. Nic, before we roll on? I know we got a lot of listener cues. People probably want us to talk about Bitcoin again because they always do. So before we get that, any last thoughts on the metals, sir?
No, I'll go to the. Did he have a silver collar or a silver strangle that they talked about?
He had a long-term 2-year collar. It was an SLB
collar.
Yeah.
Okay. Yeah, I mean, essentially what we've been talking about is just sort of independently hedged strangles, right? Instead of letting the strangles cancel each other out to put in a call, you're basically you're treating them as two separate as two separate trades and sort of hedging them back and forth as you go along. You get to the high side, you do a call with futures. You get to the low side, you do a put with futures. So you can really move and bounce around in there. So no, but that's it. Yeah, we should probably talk some Bitcoin. There's some stuff to talk about. So
yeah, people want it. They're chomping at the bit. So you ask for it, you get it. It's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, your portion of the show. You guys get to dictate all the crazy stuff that we talk about. Really quickly, before we get to that, we've got the movers and shakers for the week. We'll do a quick breakdown. What was rocking and rolling this week? Number 1 and number 2, iron ore and Nat Gas, both up nearly 5%. Again, purely underlying here. We're looking at performance over the past week. Number 3, lumber, up about 3.8%. Number 4, the E-mini Dow, up nearly 3%. Good week for the Dow, as everybody knows. Number 5, palladium. 2.36%. On the dark side, we got silver, as we were just talking about, off nearly 4% on the week. We've got copper off 3%, so bad week for the metals. RBOB off about 2.25%. Live cattle and feeder cattle both off a little more than 2%. All right, let's get to it. You guys just can't get enough of the old coin. And not surprising, it's been a crazy week. We saw it break 11,000 briefly, and then turn right back around and pretty much have a 2,000 handle swing or close to it in the course of a few sessions. So crazy town. Lil Nic, probably echoing what a lot of you guys out there are asking. Excuse me, he wants to know, or perhaps she, do we have any updates on CME's Bitcoin futures? Yes, good timing that you should ask that. They just announced very recently the start date, the launch date of those, which I believe is going to be the 18th, which is, yes, a Monday. So coming up in about 2 weeks, a little more than 2 weeks, you guys have been chomping at the bit saying you want to sink your teeth into these there Bitcoin futures. It seems like these are definitely going to be the first to market. We don't know what's going on with those other ones that have been announced. You kind of haven't heard much about them since. But CME, a definite track, a definite product. We talked about the Bitcoin reference rate here before, what they're driving it on. And now we got an actual launch date. So it seems like we're actually going to have a product pretty soon to kick the tires on, which is pretty exciting. Matt, I know you mentioned that the phone's been ringing off the hook. What are people calling you up about? What are they asking about? What is the crypto frenzy over there at RCM these days?
I mean, they just want to learn a little bit about it. They're hearing about everyone making money, losing money, volatility. I mean, the media's done a good job of confusing people, and they just breaking down what the contract size is, how they're going to trade it, how the margins are going to be treated. Can they trade it in their existing account? What FCMs are going to take it? I mean, there's a lot more questions than answers that we have right now. I think it'll probably take a couple weeks to play out, but there's a lot of interest. I will say that, from new clients and existing clients.
Yeah, and it doesn't surprise me if our audience here is any sort of anecdotal guide, and they tend to be. They can't get enough of this. Whenever we put out polls or questions, when they write in stuff, it's funny. This show, for whatever reason, now it makes sense because CME has a product. But before CME even announced their product, this became the de facto Bitcoin show on my network. I guess because we talk, people lump it in as a commodity anyway, so they kind of put it in with the other products you talk about here. Even though it's not really coin. I call it coin, but it's not really that type of currency the way you might expect. And also, there were no listed products, and there still aren't until we'll see in a couple. Hopefully, in a couple of weeks, we'll see when the rubber hits the road there. Mr. Nic. Crazy week for the old coin. Any thoughts there? 2,000 point swing. Any crazy data you guys got over there at Quick Strike on this?
Not any new crazy data. We're going to do a new volatility study here coming up in the next week just to see what's up. But I just think more from an informational standpoint, we're going to roll out something in the next. It'll be, I don't know if it'll be ready yet in CME in beginning, but probably mid-end week or next weekend we'll have some charting tools for the reference or for the real-time index, as well as for the reference rate that'll be available on the CME Group website. So that's coming fairly soon. So people can start to, the number gets displayed on the CME Group site, but if you want to see the actual, if you're looking at Bitcoin itself, you got to go to, you got to go to TradingView, you got to go somewhere else to look at another index. But now you'll be able to see the actual real-time index on their site that they're going to have the future that's going to be based on that index. The other thing to note, I looked the other day and we have the contract browser that we just released last week as well. So if you go out to the cmegroup.com/quickstrike, you can go and quickly see what all the products that exist on CME, and then also search by symbol and then see what expirations there are there, both from an outright future and a spread and options and that type of thing. So I encourage people to take a look at that because it's actually super easy to use, and you can get right to all the contract specs as well. But earlier in the week I looked and they had the DEES contract in the expirations list. Now I'm looking today and that DEES contract is removed. So that has to do with the fact probably that they rolled that they rolled that release forward a week to the 18th from the 11th. It was originally supposed to be the 11th, and now it's the 18th. So as of right now, we're going to have a Jan, Feb, and March contract that are out there as well, which this is what I find probably more interesting than the 3 contracts. I think they're going to have Jan, Feb, March, and June. I think there'll be 2. Matt, maybe you can correct me if I'm wrong. I think there's going to be 2 quarterlies and 2 serials. But there's also going to be spreads. So there'll be, right now, as listed in the contract database, it's a Jan, Feb, March, and then a Jan, Feb spread, and then a Feb, March spread. So I think that these spreads could be really, really fun to watch as well, because that's got to be all kinds of speculation. You could see enormous swings over the period of time. You see a big rally, you could see that spread swing really to the positive side. You see a big break, you could see it go the other way. So we might see some of these spreads really trade. It might be. I just can't wait to see that, to be honest with you. That's going to be really interesting as well. So look for some of the charting tools, and you'll get intraday, you'll get 1 day, 3 day, 5 day, 7 day, and then whatever historical that is currently out there, and then take a look at what's going to happen with these contracts by going out to the product browser.
And since we're talking spreads, really quickly, Mr. Nic, we had a question from Lil Nic. I'm going to put in one for Big Nic here, which is, I know you were talking recently. It was about early mid-November. You had that covered put spread you were telling us about. Give us a quick update. We didn't get a chance to check back in very often. Really quickly, hit us up on that, sir. What's been going on out there?
With which one?
The one from November 10th.
Oh, the number 10. Oh, that's what we talked about with the gold. That was the gold one that we covered. So basically what just to recap really quickly, we talked about it on that show. We were down at the bottom of the range. So we just took the closing markets and hedged it and watched that thing basically pay for itself twice to 2.5 times just with the futures movement. So I just encourage people to take a look at that stuff, because, there's all this lamentation about nothing to trade or no volatility, but there is we haven't used the words pay in the rent, but there's plenty of rent being done when you start to trade within these ranges. So that's the covered puts. And what are you saying here? No, and crude is the same. Crude's the same thing. We talk about the same thing. There's trades to be made within the range, so that's really the update. Now I'll try to make sure that I push that stuff out, so people. I did push it out so people could watch and take a look.
Yeah, check out if you're not following Nick at Twitter. There, you can get those charts. We retweet a lot of them too, so you get really good charts throughout the week if you want to see this stuff in visual form. That's the best place to do it. We got time for a couple of quick ones here. Let's go over some comments. So here's your old boy. Mark Brandt, Nick, right in, he was responding. We were talking earlier this week about, the crude had extended its rally to 58. He responded and said, I guess my 40 handle short puts are okay. So yeah, I think those 40 strike puts, you don't say what month they are. I'm guessing some of your other trades you send in probably shorter term. I'm guessing you're probably okay there on those short 40 strike puts. Unless they're like 2019, then who knows? All bets are off. He also chimed in on the Bitcoin. This has kind of been our ongoing debate here, Matt, on the show. When we finally have options on Bitcoin, what the heck's the skew actually going to look like? He says, I'm not sure, but I think the option skew on Bitcoin will be on the call side like gold, heavily skewed. The way Bitcoin is acting, long call spreads, financed by short put spreads, seems ideal. So far, it's kind of hard to argue with that. It has worked out well. Of course, those 40% down days, they may make those put spreads, I guess, sting a little bit. But if you're doing spreads, not outrights, you can cover yourself, and you'll be laughing all the way to the bank, I suppose, on all that juicy upside in the calls. All right, listeners, that music means we come to the end. You got another crazy. This show just flies by when we're having fun, talking crude, talking little gold, talking little coin, and a lot of other fun stuff. But before we go, let's go back around the horn. Check in with my cohorts. Let's start with our guest here, Mr. Matt from RCM ALTS. Matt, what is cooking in the land of RCM ALTS? And if our listeners are interested, they want to talk to you or somebody else over there about crude or metals or S&P or Bitcoin, where should they go? What should they do, sir?
Yeah, we are pretty prolific in terms of putting out white papers, educational articles, blogs. I would just go to our website, RCM Alternatives, click on blog, become a follower. We're at all the conferences, and I'd be intrigued, a month, too. I'm inviting myself back. I want to talk again once Bitcoin is live. I think it's going to be the Wild West at first, but very interested to see how this plays out in the next 2-3 months.
Look at this. He's inviting himself back here. What have we done, Nick? We've created a monster. I think you and half the world want to be on when the Bitcoin's live, sir. That's going to be the hot show. We'll have to see. We'll have to see who gets the hot seat that day, sir. That'll be a fun one. But certainly check it out, listeners, if you haven't already. RCM Alternatives.com, and I believe they're over there on Twitter, just RCM ALTS. That's an easy one to find if you want a nice little shortcut for all the content they're putting out there. Give them a follow over there on the old Twitters. I think they will like it. And give Matt a call. Tell him you heard him on the show. Tell him you agree, disagree with his crude ranges, whatever that might be. Maybe you like his options trade he put on. Maybe you want to play with it a little bit. Hit up Matt over there, and he will set you straight. All right, and Mr. Nick, we were talking before. We didn't get a chance to talk about it on the show, but you guys actually putting out some cool content over there on the Quick Strike site these days as well. So not just all the data we come to know and love, but the blog heating it up over there, including breaking down my favorite, I guess you can call it technical analysis. I think that's kind of pejorative for this. My favorite tool, let's say, which is volatility cones. Tell us what you guys are writing about over there, sir, and what's going on with the Quick Strike blog. Is this going to be our new go-to content destination, sir?
Well, I can't take credit. That's all coming from Tiffany. She's the writer of the content. She's super smart young lady that works with us. And, we have discussions about what to put out there, but most of the stuff is coming straight from her imagination. And she's trying to tie in what's going on in the market with some of the tools that we have available at your disposal in Quick Strike. So we're gonna probably try to keep going on a regular schedule, 1 to 3 times a week. So if you aren't already a Quick Strike Essentials user or a registered user on Quick Strike itself, you can go register cmegroup.com/Quick Strike and Essentials, and you'll automatically be in the list to get those emails. So take some time to go over there, and then you also have access to all the free tools all in one place. Other than that, like I mentioned, there'll be some Bitcoin tools that will get released fairly soon. New trade builder coming, which is really, really nice. You'll be able to, trade and track your trade and see how it looks historically and sort of see where your spots are, where you're going to get out. So I think that's going to be some fun things for us to discuss and talk about as we go forward. And just one more thing on that Bitcoin skew. I don't know. I'm trying. Because we've been talking about for a while, I've been trying to learn more and more, just like Matt was saying. And I think I don't know that I necessarily think there's going to be a big call skew with. I think we had talked about. I thought there'd be a flat put skew with some call bid, but it really is a function of these miners, right? The miners are the ones, they get coins for mining, right? So you got to decide, what are those guys? They're not going to just stick with all the coins they have. They're going to sell them, or they're going to sell upside call. They'll say, I'll keep my coin around for a while, and I'll put an order in to sell them at a higher price, because if they earn coins and then they sell those coins, they can basically do a cyclical loop of then mining to try to get more coins, getting their trade back in the blockchain. So I think there's some things that people don't really understand yet with the Bitcoin that are really going to come to the fore as Matt said, as this market sort of graduates from just at the canal to really ready to break out and get out there.
Yeah, I'm dying to see these products take fruition, and obviously the options, hopefully sometime next year. Because you're right, I could see an argument for almost any one of these shapes. I could see an argument for an index shape where people are selling the calls, you're right, because they want to get some liquidity, which is hard to get in the actual underlying itself. Or perhaps, and they're bidding up the puts to hedge. I could see an argument for a smile. In fact, someone on my last show was just making that argument to me then about they think it should be a smile. I can see an argument for the puts. I can see all kinds of crazy call skew. I can see argument for a bunch of different things. And so I think we need to really see the rubber meet there. I think right now, just because of the zealotry out there, I think it may be pretty heavy on the calls, but you never know. Crazier things have happened. Listeners, we want to thank you guys for joining us. It's a fun one. This hour flies by every time, but we love doing it. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered. With market data reports ranging from open interest to the term structure of volatility, Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.